I've been interviewed by Funding Pips, basically the most known prop firm in our industry currently, and they highlight in the entire interview that I made over $6,000 trading my easy, simple 95% win rate strategy. But if I'm being honest with you here, this is not the full truth because I have already made way more than that. I've made over $8,000 trading my easy strategy, and I don't plan to stop anytime soon. Now bear in mind, this is not the only prop firm that I'm funded with. I'm funded with multiple prop firms because I want to diversify my entire capital, because as we all know, the prop firm industry is not very stable, and I want to spread my eggs to as many baskets as possible, so if one goes down, I still keep majority of my entire capital. In this video, I'll show you exactly how I was able to pull all of this off, my exact way of trading. I'll walk you through my entire real trades and the practical reasons why I use several funded accounts to minimize my exposure to the markets and maximize my profits. I've been trading for over 5 years now, and after that long, you learn faster what actually works and what is just noise in the industry. Now, when I just started trading, I was looking for the holy grail, the one strategy that is supposed to make me millions within a couple of months of trading. As you can see, we have 3 trades plotted out on a chart, and anything you see on TikTok, YouTube, Instagram, whatever it is all fake, especially the future kids that are trying to predict the top of the price and also the bottom of the price. It doesn't work. We are not gamblers, we are professional traders, and that is not professionalism. Once I accepted that trading is a probabilities game, I finally became profitable, but that label needs nuances. A coin is basically like a 50-50 game, and yeah, the coin could also land on its edge, but we're keeping it simple for this one. Now, flipping a coin and getting the same side 10 times in a row is astronomically unlikely, yet every single flip has a 50-50 chance. So basically that means after you have gotten 10 times in a row heads, that does mean that the next flip has a higher chance of hitting the other side. Your chances always are 50-50 with a coin flip. Now, trading is not identical to a coin flip because the market has structure, trends, sessions, liquidity patterns, and all of that context matters a lot. As you can see, we went down in this entire price action move, and if you would have taken a long every single time, if you would have taken a short every single time, it would have been a take profit. Now, why does this matter? Because the odds are not always 50-50. You have to identify the correct market conditions in order to be profitable. You have to identify the consolidation, the moving trends, the pullbacks, and what else there is. So my point is, unlike flipping a coin where it's always just a 50-50, trading is not the same. So you can already tell I'm not a traditional trader just by looking at this trade. I focus on a high win rate and a low risk reward because I don't need to be right on the direction in order to make money. I treat trading like a business. I want my losses to be small and my profits to be fairly big. Now, as you can see on the chart, this looks like a heavy ass stop loss. It looks like we're selling our entire house on it. We're going to be homeless after that trade is going to be a loss. Right? Wrong. Because I'm risking the same amount everybody else would do, which is 1% or even less a lot of the times. Obviously, that requires a very high win rate because if you're not able to win a lot of the times, then your strategy does not have edge. The lower your risk to reward, the higher your win rate has to be, and the higher your win rate, the lower your risk to reward will be. And it's not like I haven't traded the traditional way of trading. As you can see, you can also go for a 1-for-2, having a 40% win rate, risking 1%, and you're good for the day. But let's be all honest, this does not work for a lot of us, and I've been there myself. I was trying to not only predict the price, but also the timing aspect of trading. And this is just so frustrating, especially when you have a trade like this. And it just feels so frustrating because I know how it feels. Now look at this kind of trade. We have actually hit take profit, but before that we got stopped out, and this is a very common pattern. The market does not move randomly. It does target your stop losses. You have to know where price is going to go next. Now the problem is that you're not only trying to predict where the price is going to go next, you're also trying to predict the timing. So if you would have been a little bit more laid back on this entire trade, this would have been still a take profit, and this has happened to a lot of us. Now here's how I manage that in practice. I size positions. So a string of losers never kills the account. I keep a fixed and repeatable risk to reward. That is the reason why for every single trade I'm making 200 bucks. Imagine going onto the charts and you already know that this will be a take profit hit for the day because your win rate is extremely high. Now, and a very common mistake in this way of trading is that you only want to see the outcome that you would like to see, which is the take profit being hit. But in this way of trading, you don't do that. This is a very simple example where we could have taken a short onto the downside. It is basically a continuation of the entire trend that we're having currently. And a lot of people don't consider the actual facts of the markets, such as those relative equal highs that you can see on the chart. This is exactly why you keep on losing, because you only want to see what you actually want to see, but you don't consider the other side of the market. Another reason is you're not understanding the current market conditions. As I said previously, you're only focusing on the take profits and not your stop loss. You have to know in what kind of phase are we in right now. I have multiple models that I'm using, and each model has their own respective environment to trade. Now, having a low risk reward is especially good in very consolidating market conditions. I want you to focus on just that little bit of price action. You can see the price just hovering around back and forth. This is great for a low risk reward, because if you think about it logically, now in this case I have marked out the entire consolidation phase for you. Now I can just close my eyes and place a random trade onto the chart because I know it will hit take profit. So I just do that real quick. I'm just anywhere in the chart, and here I took a position. Now if we just draw out our very standard and regular risk reward, which is going for a 1, so basically risking 1% to gain 0.2, you'll quickly realize that this trade is an easy win. And I could have done this at any given moment and it would have still hit take profit. Now, but if we take this little bit of price action and I'm just taking a random trade, I will most likely end up losing unless I'm trading the downside, unless I'm shorting. But you cannot be right on the entire bias for the day every single day. So by identifying the right market conditions, you can tell which model or which type of approach you're going to use for that current market. In this video, I'll bring you a little bit closer onto my bread and butter, something that I've been using for years now consistently and almost every single day. I pay huge attention to relative equal highs and lows because they act as insanely well magnets onto the market. Now a lot of people would see this as this is going to be resistance, and they see a little bit of a sweep and they want to trade it onto the downside. Now that by itself can work, but we've all been there. We see this as resistance and we try to trade it onto the downside, and our stop loss is going to be right above that high because this is supposed to be resistance, and the next thing you know, you got stopped out. But we do the complete opposite. We want to trade onto the relative equal highs and give the trade way more room to breathe, because we cannot predict the timing of the price. Once again, the market maker or the market as a whole does not give a damn about your position or your money. Although it does target your stop losses, this is not the reason you're losing. It's because you're fighting the market and trying to predict what's going to happen next. And you also try to predict 10 steps ahead. In this way of trading, you only want to know what the next price action move is. That's it. Now, more confirmation will never hurt your trades. After trading for over 5 years and testing different types of concepts like ICT, SMC, indicator systems, some mechanical strategy, some random bot that is not even working, and basically every single strategy that your favorite guru YouTuber is presenting to you, I've tried them all and they do not work. Now, relative equal highs consistently outperform everything you have ever seen before on YouTube because this actually works. Now, the thing is that everything I show is real and documented. I share full trades, full analysis, and the reasoning behind each decision on my Discord, so you can follow every single step that I'm taking and to actually understand what I'm doing in the markets, because that's the only way to keep a clean track record. And if your favorite trading guru YouTube guy is not able to do that, then he's a scammer. Now look, trading was never meant to be constant winning. No real business only records wins and never pays expenses. If you want your trading to run, you have to invest in it. That includes energy, skill development, and capital that you had to invest, which is exactly why that loss is eventually going to come in trading, even with this high of a winning strategy. I never claim to have a 100% winning strategy. We as low risk reward traders are basically immortal to the market, but we're also not invincible. Eventually that loss is going to happen, and this is normal because trading operates like a real business, and as long as you're able to make all of those losses back over a series of trades, then you're in a net profit, and that's basically all a business really cares about. So if you just skip forward after all of those trades, even though we have taken massive losses, you can see that we have taken in total 100 trades, 95 wins, 5 losses, risk 1%, and also our total P&L is 23.75% on the entire account. Now, before all of you just say, okay, they were just random trades, everybody can draw them out. Here you can see the actual results. We have not taken a single loss in over 3 months. As you can see the calendar, if we just skip a little bit onto the backside, you can see skipping forward, green days, skipping forward, green days, and this month is also green days so far. Now, I cannot guarantee that the upcoming days will be wins because once again, I'm a trader. I'm not a gambler and I'm a professional. I know that I will take a loss eventually. Now, guys, you can have the best strategy, the best risk management, and also be a master at psychology, but every professional trader needs a professional journal. That's why I personally use TradeLens. Now, if you want a 10% discount, it's the second link in the description. Now, and even in the trades that I've presented to you earlier, they are not just based off of random levels and also not just based on risk to reward. They have actual logical key levels that I like to look out for in the chart in order to determine what the stop loss is going to be and also what the take profit is going to be. This is not just a game of probabilities. This is a game of managing your risk and testing your psychology as a person, which is exactly why I chose this way of trading. It gives me way more comfortability because I know that I'm going to win that day. Having such a high win rate basically guarantees you're going to win. You have to be really unlucky to lose. Now, as previously mentioned, I operate multiple prop firms. That way I keep on maximizing my capital because each account follows strict risk management rules. But they're also just not trading the same model and also not the same risk management as a whole, because that gives me way more flexibility, because basically on the low risk model it is impossible to lose the account. Even on a medium risk it is still impossible to lose the account. But if I start doing a high risk model, then I might as well blow the account. However, as long as I still make more than losing, it is worth losing the account. Because if you have spent 500 on the entire challenge and have gotten from payout to payout to payout all the way to your all-time rewards, and then you blow the account, then it is completely normal and it's not a problem. Because since I have only paid 500 for the account, basically I'm still in a net profit and it doesn't matter. I can just buy another account, pass it, and start doing the process all over again. Now, obviously, I cannot break down my entire strategy in one video because that would explode the video. However, if you want to follow my process, you need 3 things: a repeatable edge, disciplined risk management, and also a commitment into documenting everything. Building those habits turns trading from a hobby into a business and makes consistent gains over time. You have made it this far into the video, and let me be very clear about this one. You can go 2 paths in trading. Either you're taking the path that I had to take, which led me to countless of platform challenges being blown and also personal accounts that I have lost. The list goes on. Or you can also take the shortcut, being mentored by somebody who has 5 years of experience, more than 500k in total funding, and also multiple prop firms. Now, I have been interviewed by prop firms where I basically explain how I've gotten to all of those payouts. When you're trading for this long, your win rate is extremely high. That's why we barely get into any kind of drawdown. Now, and this is not just a regular mentorship, you will get access to everything I have learned over the past 5 years of experience. So if you want to learn how to get the same results, it's the first link in the description.